exclusive ski resort of Courchevel. UBS has reached a settlement with Mozambique over Credit Suisse's role in a ship financing scandal. The undisclosed settlement closes a decade-old case which initially saw Credit Suisse financing the construction of a new coastal patrol force and tuna fishing fleet for Mozambique. The African nation has alleged the Swiss bank ignored red flags and the corruption of its own bankers' bond deals. The deal to avert a US shutdown, a shutdown of US federal agencies, will keep the government running until November 17th. But that may come at a heavy political cost for the House Speaker, Kevin McCarthy. Let's get some analysis now. Thomas Gift joins us, Director of the Centre of US Politics at University College London. Thomas, very nice to speak to you this morning. So clearly the pressure removed in the very short term. We're not sitting here with a shutdown ongoing in the United States. We've kicked the can, if you like, to November 17th. Will we face just exactly the same dynamics then? Has anything fundamentally changed?
Well, I think you hit the nail on the head, which is nothing has fundamentally changed. A continuing resolution essentially just pushes this decision down the line, gives both sides a little bit more time to work out some of their differences. But, the fundamental fact remains that Democrats and Republicans really aren't close in terms of the basics of the negotiation. That especially includes funding over Ukraine, but a whole host of other issues, particularly with regards to the Freedom Caucus and their demands for much steeper cuts. So I think it's very likely that we are just in this situation in 45 days from now, talking about the exact same thing.
Thomas, what do you expect to see on that funding for Ukraine? Because $6 billion of funding for Ukraine's fight against Russia, defence against Russia, was not included in the bills that were passed, much to the alarm of President Biden and some European leaders who've been already speaking about the subject. Would you expect ultimately that this funding is secured in the US?
Well, I think that the funding is probably going to be secured, but I'm not sure if it's going to come through this legislative process. What we're seeing really is an even harder pivot away from Ukraine aid among some House Republicans. I think skeptics aren't just saying no more blank checks. They're actually accusing opponents of pushing an agenda that prioritizes Ukrainian interest over American interest. And I think that the more the war drags on, and the more these budgetary battles drag on, the more that feeling seems to be catching on inside the Republican Party. So supporters of funding Ukraine will continue their lobbying, and I think that there are ways to get financing. But for critics of assistance, this last week's really saw two major victories for them. The first is the fact that this continuing resolution excluded $6 billion in funding to Kyiv. And the second is that nearly half of House Republicans voted to take away $300 million from a defense spending bill that would train Ukrainian soldiers and help to buy weaponry. That eventually passed, but it didn't garner the support of Republicans initially. So I think the fact also that happened on the heels of Ukrainian President Zelensky's meeting with legislators in Washington just about a week and a half ago to try to shore up U.S. support. The fact that, that's not, Republicans aren't sort of getting behind that, I'm not sure if it bodes particularly well for increased financing.
But on the broader question of whether there still is majority support for backing war in Ukraine, backing the Ukrainian side here, is that really in question, Thomas, or is this just very loud, vocal, empowered voices on this particular piece of legislation who actually, if this was just about Ukraine, would not hold sway?
Well, I think there's a sharp division between the House and the Senate. If it was just about the Senate, then there is broad bipartisan support. The House, I think, is a much different story. You certainly have the right wing that is very skeptical of financing. And then I think you have sort of, it's hard to know exactly the number, 50 or so Republicans, I think, that could go either way, probably don't want kind of full levels of financing that they would like to see in the Senate, but probably want to give some to it. So I think that then just becomes sort of a battle about how much and not if.
Okay, on to some of the personalities involved here, I suppose, Thomas, for want of a better word, or the actors here. Kevin McCarthy, his future. What do we make of where his future goes from here? We've got Matt Gaetz, the Florida congressman, Republican, of course, says he's going to file a motion this week against him because McCarthy had to rely on Democrats to push this funding deal through. What do you think is the future for Kevin McCarthy, given that kind of language, at least?
Well, the language certainly is threatening. Personally, I think that McCarthy's position as Speaker is a little bit safer than many do, and that any motion to vacate that position is unlikely to pass. For one thing, it's hard to objectively look at McCarthy's record and say he's been wholly ineffective. I mean, just go up and down the line. He secured the Speaker's gavel in the first place, which was no small feat. He helped to raise the debt ceiling, and now he avoided a federal shutdown, even if temporarily. Obviously, a lot of the right wing of the Republican Party aren't happy with how he did it, but he did it. And at the same time, I think no one can say that McCarthy hasn't tried to placate the right-wing members of his conference. You know, McCarthy, to my mind, is maybe a savvier operator than he's often given credit for. You know, the bipartisan compromises he's reached and the attempts to find common ground with Democrats don't sit very well with some member of his party. But, you know, it's a tricky political situation. I think the reality needs to set in that Republicans aren't going to get everything that they want. There's an opposition Senate. There's a Democrat in the White House. Plus, you know, the big obstacle with ousting McCarthy is that there's no obvious replacement. I think that that's no small issue. It's not as though the Freedom Caucus is all rallying around one clear successor. So for those reasons, you know, I do think McCarthy is going to survive here.
And Thomas, as we look ahead then to November 17th, it's really not that far away. Are there pieces of legislation that you think are just not going to be approved, not going to be voted on, not going to get through, as we see US government once again having to focus on these shutdown threats? What is not going to get done as a result of all this?
Well, I think basically nothing is going to get done. I mean, that's sort of been the watchword of Washington over the last several months, because we're in divided government generally. So I can't imagine any major pieces of legislation getting pushed through. That's particularly the case not only because of this budget deal, but also because what Republicans have been trying to do on the impeachment front. And so, you know, I think we're just in for a lot of stalemate. What I'm really watching is how these negotiations unfold. If there's any way that Republicans and Democrats can reach an agreement before the 11th hour again, I'm really skeptical. I think that we're just heading right up until the brink.
OK, Thomas, thanks so much for joining us. Thomas Gift, Director of the Centre for US Politics at University College London, joining us very kindly from the US at this early hour. Let me get to the European breaking news stories from a macro perspective. We've got Italian PMI just breaking. September manufacturing PMI, this is, rising to 46.8 versus 45.4. So just as we saw with the Spanish number a little earlier on, we have a number that is better than the previous month's reading. That not doing too much to support the euro. You can see the euro is a little stronger this morning, but fairly flat against the US dollar. The dollar has been, was earlier in retreat against various currencies as a result of risk appetite, but right now we see it flat against the euro. Coming up, with the US shutdown no longer imminent then, markets are focused elsewhere, including jobs data, which we will get this week. That wasn't certain at the end of last week. We will discuss what to expect. That's next. This is Bloomberg.
Hey bro, yeah, I'm at the mamak right now. I'm about to meet my senior, Adam. You know him, right? Yeah, apparently this guy...
Is crucially important, and I think we've moved from this attitude from it's an indulgence, a waste of time, almost an illness that needs a cure.
For something as universally important to human life as sleep, mysteries surrounding its necessity and utility have only just been recently uncovered.
Some of our biggest discoveries were in the 1970s or 1980s, and so it makes it a really exciting field because it seems as though we're uncovering new insights each and every day.
Some scientists are going further to find out how sleep and what happens there can be harnessed to further expand our understanding.
It's easy to memorize things. That makes you smart if you can spit back a lot of facts. But if you want to be wise, if you really want wisdom, you've got to know when and how and why to use that information. And that's what your brain figures out while you're sleeping.
From New York City,
From London, in Sydney,
from Washington,
in Tokyo.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
Here's what I'm watching.
You do not want to miss this story.
Is there the kind of upside?
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question.
Great question.
Best question I get all night.
Bloomberg, top experts, great questions.
Since the spring budget, our debt interest payments have gone up because the markets are pricing long-term debt more expensively than they did. But there's another reason why this isn't the right time for big tax cuts, which is even more significant, which is that they would be inflationary. If we put money in people's pockets, they would spend that money and then prices would go up. And just at the moment that we're turning the tide on inflation, we wouldn't want to go in the opposite direction.
That was the UK Chancellor of the Exchequer, Jeremy Hunt, speaking to us from the Conservative Party conference in Manchester, talking about turning the tide on inflation and how he will steward the economy with that in mind. Welcome back. This is Markets Today on Bloomberg TV. We are 51 minutes into your European trading day, and the equity market picture actually quite positive. We are more positive than we thought from the futures picture this morning. So up around 0.4% on the Stock 600. US futures also moving a little bit higher this morning. So lots to focus in on when it comes to the fact that there's no shutdown in the United States. Let's just get some breaking news coming through on the French manufacturing PMI. We've had numbers from Spain and Italy. The French number then showing exactly the same trend, slightly better than the preliminary reading number coming through. So 44.2 is the number we have on French manufacturing PMI. The prelim number was 43.6. So again, improving at the margin. The euro is fairly flat though this morning against the US dollar. Here's what we're watching out for this week. Today at 3 p.m. UK time, we'll get US ISM manufacturing data. We'll also hear from Fed Chair Jerome Powell, who will be taking part in a roundtable discussion. That's at 4 p.m. London time. Tomorrow, there's an update on US job openings, the JOLTS figures. Then on Wednesday, that'll be a busy day, we will be getting US ISM services data. So today we get manufacturing for the US. Wednesday, we'll get ISM services. OPEC Plus is also holding an interim monitoring session. We've heard from the UAE saying OPEC Plus's stance is correct right now. The ADIPEC conference, of course, ongoing over in the Middle East. The ECB President, Christine Lagarde, is also going to be speaking midweek, so we'll focus in on her comments. On Thursday, the Bank of England's Decision Maker Panel survey, that will be released. And to round out the week, we will, of course, finish with US payrolls. Let's talk about some of the things that are going to be affecting markets this week. Eddie van der Veld joins us from our Markets Live team. Good morning to you,
morning,
Eddie.
Anna.
It's Monday morning. It comes around fast, doesn't it, these days? But we're heading towards a jobs report. No sooner, it'll come quicker than we think as well. It'll be Friday.
Yeah,
soon.
well, there was a little bit of relief, I'll have to say, on my desk this morning, just to see that that the government and the US is not actually shutting down, that we are actually getting some of this data. And, that's not just a flippant comment, because if you... In a world where there is less forward guidance, every data point becomes more important. Therefore, if you delay the data, it gives the markets less time to price in, any volatility that they have to, before subsequent meetings from the Fed and so on. So I think it's really important that at least we'll be getting this data early, or at least this week, and not that we won't have to wait until after a shutdown. And there's a lot to look forward to, right? I think if we're looking for things like the participation rate in the US, which has been ticking up, but is just about getting to that level where it was before the pandemic. So can that continue, and what does that mean for interest rates going forward?
OK, yes, and thinking about interest rates, we've got Treasury yields going higher. In particular, I see the 10-year, actually the 10-year, 2-year, 30-year all going higher in terms of yields this morning. And it's interesting tying it into what you were saying there, because I think some people went into the weekend thinking, well, if we're going to get a shutdown, the data won't be coming. The Fed will have to go slowly, because if you don't have the data, you move slowly and carefully. And maybe that gave us some relief from the higher interest rate story at the back end of last week. Today, though, we're back to what we saw in September, higher rates.
Yields pushing higher, pushing higher, pushing higher. And you know what's interesting today is that it's not all at the long end of the curve. In fact, it's the front end yields that's coming up a little bit more, which is the opposite of what we really expecting at this kind of point in the hiking cycle. I think there's probably some technical factors behind this. I think I would wait longer, before I make a real judgment on whether the steepening trade that we've seen over the last few weeks is done, and whether or not we're going to see the steepening coming via the front end of the curve.
Yeah, we've seen the long end doing its bit. Do we need the short end to do it too? German September manufacturing PMI, Eddie, let's just check in on that. 39.6. The prelim number was 39.8. I mean, we can quibble about where it is versus that prelim number, but it's under 40. These are really weak numbers for manufacturing over in Germany. It's
a pretty terrible number. Europe feeling more and more stagflationary, right? And particularly in Germany, manufacturing matters much more so. In France, you look much more at the services number. But I mean, these numbers are really weak, and we need to see a significant turnaround there. The US still in a much better position than Europe is.
Okay, that's the European manufacturing story then. So just closing out the hour with those German figures. German manufacturing PMI 39.6 against a prelim reading of 39.8. So we knew it was going to have a 30 handle, but still very weak numbers coming through from Germany. In terms of manufacturing, we will build up the data picture, as Eddie says. We'll get that data out of the US this week. We'll get the ISM manufacturing number today. We get the services number midweek. We'll get the payrolls number on Friday, crucially. So that will be something for the market to work towards. We'll also be hearing from a lot of Fed speakers, including Jerome Powell himself, today. How happy
perluan kepada air lebih lagi di musim kemarau yang
will Fed speakers be with the way that yields have been moving? Thanks to Eddie van der Veld from the Markets Live team. More on the markets coming up next. This is Bloomberg.
That's me, Max. I have been writing about Wall Street for almost 15 years. And what that means is I write about feuds and rage and rises and falls and comebacks. And every now and then, I also write about a couple of villains. Thank you so much. And now, I am about to do something new and very, very scary. We are making a show, and it's based on Bloomberg Businessweek magazine. So what is this show about? It's a show about money, power, culture, pop business. We're gonna ask complicated and profound people about their ideas, their careers, their lives, their risks, their failures, their imagination.
It's so incredibly liberating not to care what other people think.
I was giving my tools to other communities. I wanted to bring those tools home.
Tune in. Please, really actually tune in. I desperately need an audience.
Our studios in New York and San Francisco. Our expert hosts of the data and analysis about the companies you know and the startups to watch. Plus, the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. 12 p.m. on the East Coast, 9 a.m. in the West. Only on Bloomberg Television, your global business authority. Markets countdown in Europe from the financial centers of the world. Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. Weekdays. traders and market movers. This is The Pulse with Francine Lockwood.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lockwood here in London with the conversations that matter, and here's what's coming up on today's program. European stocks and U.S. futures gain after Congress narrowly averts a shutdown, keeping the government running until mid-November. The UK Chancellor tells Bloomberg the government does not have headroom for tax cuts, setting up a potential standoff with some senior colleagues. Plus, our exclusive interview this hour with the JP Morgan EMEA Chief Executive Officer, Viswas Raghavan. We'll talk about the City of London and technology. Now let's take a look at some of the European market stocks. Now this overall is the picture for the European market map. If you look at Euro area September manufacturing PMIs are coming in also pretty much in line with expectations. 43.4, preliminary was 43.4. So there you go, bang on in expectations. Let's also get to the wall if we have a wall, so that will give us a good indication of what the maps are doing. There you go. As if by magic. Sometimes we're magicians. You can see the CAC 40 actually getting some 0.5%. We're seeing gains across the board, not huge gains. Certainly the FTSE gaining some 0.2%. But remember, it was only 24 hours ago that we were really worried about potential government shutdown in the U.S. The relief rally could be actually quite short-lived, but this is what we have at the moment. Then we also have Citigroup actually with a pretty bold call of, I think, Brent or certainly WTI at $70 a barrel into next year. For the moment, it's gaining quite significantly, 92.34. Youssef Gamaluddin is on the ground with some fantastic interviews. I think we're also speaking to the Eni Chief Executive Officer. Overall, the picture is basically one of gains across the board. Look, if you look at what we've seen for the Treasury sell-off, so let's get to futures, but then we'll do the Treasury sell-off. The Treasury sell-off that we had seen over the last couple of days is definitely a story of what's been happening with shutdown, and then you can see S&P futures gaining at the moment. This is the year-to-date S&P look ahead. Now, the deal to avert a shutdown of U.S. federal agencies will keep the government running until November 17. It may come at a heavy political cost, though, for the House Speaker, Kevin McCarthy. Now, for more on all of this, let's bring in Bloomberg's Bill Ferry. So, Bill, are we actually going to be having these same last-minute theatrics in November? And what about the threat to the House Speaker's McCarthy leadership?
Yes, we absolutely could be going through this same cycle again in just about 6 weeks. U.S. Congress and the White House have kicked the can down the road in the sense of continuing government funding, but really not extending funding into the fiscal year beyond that November 17th deadline. And another question now, as you mentioned, is whether Kevin McCarthy will be around as House Speaker to even be a part of that fight. One influential Florida Congressman, Matt Gaetz, has said he is calling essentially for a no-confidence vote in the Speaker as soon as Congress resumes this week. It's not clear whether that will go very far. The challenge that McCarthy's opponents have long had is that there's no consensus candidate to replace him. So unless the Democrats somehow decide to swing votes in favor of this hardcore group of Republicans that wants to oust McCarthy, the Republican Party will really be at a standstill for a little while as they try to deal with this challenge to the Speaker's authority.
Bill, thanks so much. Bill Ferry's there with the very latest on the shutdown. Now with us, Sandra Horsfield, economist at Investec Bank, and Tim Craighead, senior European equity strategist at Bloomberg Intelligence. So thank you both for joining us. Tim, that was a bit of a relief. I know we'd gone through the numbers of how much equities would suffer if we were to have a shutdown. Is it just postponed until November?
I think, yes, in a word. You know, in many ways, there's the fear factor of a government shutdown because it's a big deal. But from an equity perspective, higher interest rates, the negative implication of higher interest rates on valuation is a bigger deal to me, and a bigger reason why both U.S. and European equities have sold off over the course of the last month or two. And in fact, you know, if we had had a shutdown, that bad news could have in fact been good news from an interest rate perspective. And so the reverse, if we have a little positive rally this morning, I think it basically reverts back to an interest rate play, which is going nowhere at this point.
And I want to talk about the economics in just a second, but overall, I mean, this could also be short-lived because we don't know what's around the corner, and there's an overhang of actually the economy and whether the U.S. will go into recession.
No, absolutely. And I have to say, it'd be very interesting to get Investec's perspective. You know, our Bloomberg economists are worried that, in fact, the U.S. is more prone to recession. And from a European perspective, clearly we're seeing weakness. You saw the German PMI numbers, manufacturing numbers this morning, which are quite weak.
And Sandra, there's this funny old economy right at the moment. I don't know if it's a technical term, CFA level 5 maybe, but we're still in this like wait and see situation of whether we do see a recession or we just scrape by, but the consequences could be very different.
That's right. I think we're coming from this, from a situation of really resilience in the first half of the year that has taken people by surprise after the huge interest rate increases that we've had. But there are headwinds, and they're quite clear and stark. We have headwinds coming from the fiscal side, not just because of the shutdown debate, but also the repayment of US student loans, which is now kicking in, and that will slow the economy. Just how much relative to the still tight labor market, that's the big question now.
Sandra, on the U.S. shutdown that, for the moment has been averted, what's the read across? So is there more political consensus? Is there going to be a change with Kevin McCarthy, or is it just kicked down the road?
If the story had just been, that's it, there's no shutdown, I think we would have had much bigger a market reaction this morning. It does very much look like a kick the can down the road situation, and we'll just have to see what plays out at the end of this. For now, I think everybody's in a holding pattern.
So, Tim, what does it mean for equities that we like at the moment?
So, in the equity market, a couple of interesting things going on. Interest rates still stickier from a European-U.S. perspective. The exception has been the UK. And over the course of the last month, as we've seen the U.S. sell off and we've seen Europe broadly sell off, the UK has stuck out quite remarkably, in part because interest rates here do seem to have a pause with a genuine surprise from the BOE. At the same time, oil is ticked up and the FTSE is heavy on oil. And those in combination have helped push down the pound. And you've got foreign earnings that are quite important for the FTSE, more so than most other European markets. So you have all of these coming together that create a favorable wind at the back of the FTSE relative to many other Europeans. And I'd mention one last thing. Don't forget, August and September are historically very poor seasonal months for European markets. October tends to be more neutral. November seems to be quite positive as you start to look ahead. I think a lot of this late summer sell-off could in fact just be a setup if we do have a pause in ECB policy at some point because of the inflation outlook improving. Could be quite interesting at the year end across European markets.
And Sandra, I guess no economies are created equal, so we'll talk a little bit more about the UK, but if you look at a stronger starting point maybe for GDP, what does it mean for a likely recession in the UK?
I think in the UK, right now, we are still, again, starting from a strong labour market. We have to bear that in mind, but there are more signs of weakening. Lately, we are seeing indicators of vacancies, which had already been starting to slow, turning more decisively. Unemployment is starting to tick up, so perhaps that sort of pass-through to the economy from the interest rate rises is now starting to bite. We're still looking at a winter recession, not a very deep one. We think that will be averted, given that the improved energy backdrop is there, but it's still certainly a weak spot, we think, that we're entering into.
And so how does it compare with the rest of Europe?
The rest of the euro area, I think, in particular, is quite affected by the manufacturing sector. We see that in the PMIs. They have really suffered, especially where the manufacturing sector is concerned until now, but services are also slowing. We're seeing bank lending slowing in the Eurozone. And sort of generally, that's a signal that the economy really is in for a much more of a response to the interest rate hikes. So a deep recession, again, doesn't look likely, but a soft patch, certainly yes, in our view. So some countries, Germany, Italy, perhaps in recession, maybe others will escape it. So a sort of muddling through scenario in aggregate is probably the best.
All right, Sandra and Tim, thank you so much. Tim Craighead there from Bloomberg, and Sandra Horsfield, economist at Investec Bank, stays with us. Coming up, tax cuts would be inflationary. That's according.
Let me tell you a story.
Would you say race relations in the United States are much better than when you were growing up in Mississippi, or do you think we've made less progress than you think we should have made?
Both. I think that much better than when I was growing up. There's so many people who occupy areas and I never thought I would see them in. But I would have hoped it would be better. It's been a lot of progress, and somehow we're in an era now where, in spite of the progress, race relations in certain areas has become very scary. You know, some of the things that one reads about now remind me of growing up in Mississippi.
Wall Street is waking up. Europe is already trading. And Manus Cranny and Danny Berger are making sure you have the news, data, and analysis you need to set your agenda. Micro, macro, and everything in between. Manus in New York and Danny in London follow the money around the globe. Take a daily deep dive into risk and help you make informed decisions for your trading day. Watch Bloomberg Brief, weekdays at 5 a.m. Eastern, only on Bloomberg. Context changes everything.
The conversations that matter, the insights you need. This is The Pulse. I'm Francine Lacqua here in London. Now, here in the UK, the Chancellor, Jeremy Hunt, says cutting taxes now would be inflationary. Ahead of his Conservative Party conference speech later today, Hunt also told us it's uncertain if there will be tax cuts before the next election. Well, joining us now from Manchester, from where the party conference is going on, is Lizzie Burden, who just spoke to the Chancellor. So, Lizzie, good morning, first of all. What were your main takeaways?
Yeah, good morning, Francine. I have to say the atmosphere here is less chaotic than last year when Liz Truss's administration was somewhat floundering, but it's still pretty downbeat here. And it's pretty downbeat where you are, in the sense that our latest Bloomberg Pulse survey showed that the majority of finance professionals reckon Keir Starmer, the opposition Labour leader, would be better at running the markets and the economy than Rishi Sunak. So that's where I started the conversation. Take a listen.
The answer is that we've been through a very challenging period in the British economy, and as people see Rishi Sunak and my plan working, we will start to see those numbers change. And when I became Chancellor and when he became Prime Minister, inflation was over 11%. Now it's down to 6.7%. That's a fall of 40%. We just heard last week that our economy has recovered better than France or Germany since the pandemic, and that's because of the decision that Rishi Sunak took as Chancellor to introduce the furlough scheme, one of the most generous schemes in Europe. And so I think as people start to see that this is a government that is prepared to take difficult, long-term decisions to make our country more prosperous, they will understand that the Conservative Party is the party of wealth creation that will mean in the end we have more money for our precious public services.
Well, speaking of the long term, let's talk about HS2, because we are in Manchester. Your predecessor, George Osborne, Conservative Chancellor, raises the question, how can any foreign investor trust a Conservative promise if you can't make certainty on HS2?
Well, I'm really sorry to disappoint you, but I'm not going to be able to talk extensively about that because we haven't made a formal decision, and at the appropriate time an announcement will be made. But what I will say is that we would always want to invest in our economic infrastructure.
The other big controversy that's looming over this conference is tax cuts. Many of your colleagues say you can't win an election without them. Michael Gove wants tax cuts for workers, but in January you told Bloomberg your priority, when it's affordable, are tax cuts for business. Is that still the case?
Well, I'd like to have lots of tax cuts, and I think that we have already cut business taxes when it comes to, for example, business rates. The £13.5 billion package I announced at the autumn statement is about an average of a 10% cut.
But between now and the election?
We've introduced capital allowances for 3 years, most generous capital allowances in the world, introduced in the spring budget. But to answer your question very directly, if we want faster growth and also an end to taxes ever ratcheting higher, that is possible, but there are no shortcuts. And what I'll be saying this afternoon is if we're going to do that, we have to make it easier for businesses to grow. We have to spend taxpayers' money more efficiently. We need to reform the welfare state. Those are difficult decisions, but they are decisions that Rishi Sunak and I are willing to take, because the choice in British politics is between a party that does want to bring down the tax burden and the Labour Party that doesn't.
So as you heard there, the Chancellor trying to focus on what is called here, it's the slogan, long-term decisions for a better future. But inevitably, the focus is on the short term because a general election is on the horizon. He will not commit to tax cuts yet. He says that they would be inflationary, but he says that they will depend on how much headroom there is. So hinting there won't be borrowing to cover tax cuts, which are what many of his Conservative MPs want. Look, today the headline act is going to be his speech at 2 p.m. The focus is expected to be on welfare cuts and a rise in the minimum wage to try to reduce economic inactivity. The question is, what will businesses do in response? Are they going to raise prices to cover the bigger wage bill? That would be inflationary.
Yeah, a fantastic interview, Lizzie. Thank you so much. It'll be interesting also to say how that goes down with some of his Conservative colleagues that really wanted bolder moves ahead of the election. Now, still with us, Sandra Horsfield, an economist at Investec Bank. Sandra, thank you so much for sticking around. I mean, so many questions on the UK, which is productivity, inflation. Can the government actually reduce inflation? I mean, this is the kind of supply-demand of, food, energy, and what the Bank of England does.
Absolutely. There are certain things that are directly under the government's control. We've seen that with the energy price cap, for instance, and the subsidies that have been implemented on top of what simply market movements would have had. So, yes, those have direct implications, so direct government decisions. Otherwise, it is much more of an indirect stance that takes effect. You said demand is important, so how much fiscal stimulus there is will determine the demand in the economy to a certain extent, and that will influence relative to supply where we end up on inflation. For that, we can't have fiscal policy going in one way and monetary policy in the other. And I guess that was the big concern last year, that we are heading in that direction. Clearly, that's something that Mr. Hunt would like to avoid this time around.
Sandra, what's your biggest concern about the UK right now? So, again, it's a tight, it's a small, tight labour market. It's a very open economy. And I think Mark Carney once said we rely a lot on the generosity of strangers. It's like basically investors, international investors that fund a lot of the UK.
Absolutely, and I think that is one of the factors perhaps that has been holding back sterling for some time now, that we do rely a lot on external funding. It is quite difficult to grow the economy at this point, and indeed the room for making very large investments is limited given the fiscal backdrop that has deteriorated due to one-off shocks that have hit us. Clearly, a pandemic is a big shock, and the response for this was never meant to last that long, but nobody knew. So all of that has, however, ratcheted up the debt level, and that has to be taken into account when setting policy going forward. So the difficulty is how do we sustain, how do we create creations for the economy to grow here?
So first, and this is the main problem, right, is that if you look at a lot of the blueprints, it's unclear exactly what the path forward for growth is. But if you're the Bank of England, is that it, or is there more to come in terms of tightening?
I think from the Bank of England's perspective, they will have been reassured by the latest inflation numbers for a time. And I guess that was the story as we were in the summer. It looked like we were really overshooting relative to the expectations in terms of interest rates. Markets took fright. We had this big spike in rate expectations at some point. People feared we could get to 6.5% bank rate or so to really clamp down on demand. Now we're seeing more signs that the economy is slowing, that the labour market is turning, that perhaps these wage demands aren't going to go up that high. And the Bank of England is hoping that just by holding it steady from here, that will be enough. We think it probably will be. So the higher for longer tabletop mountain approach will probably be the likely one. But it may be only until the middle of next year or so when we could start to see rate cuts coming back onto the table.
So interesting, Sandra. Thank you so much for all of your time today. Sandra Horsfield there, economist at Investec Bank. Now, coming up, we'll have plenty...
Mak, ayah, saya nak baca Quran, nak...
Obviously, we were trying to create shoes for me to wear in the Olympics, and that was happening pretty quickly. And then just understanding a new industry and how shoes are even made. But as we went down that path and started to just learn and research more, we learned that shoes have not been made for women. What that means is a shoe is made off of a last, which is a mold of the foot, and it's the mold of a man's foot used to make women's sneakers. And I think it took time for us to really grasp that, because we've been in shoe stores and we've gone to the women's section and it's like, no, there are shoes for women, like what's this over here? And then to really understand, like, all of that is marketing. This is just a man's shoe, like in a different color. And so that kind of eye-opening experience was just like, okay, we got to do this. And even more than making the shoes, like, there's a deeper purpose here. Like, women deserve better and we shouldn't be an afterthought.
The boundaries of the entertainment world are blurry, and they're all scrambling for the same thing, screen time. And navigating this multiverse is no simple task. At Bloomberg Screen Time, it's culture, business, converged. Bloomberg Screen Time, Naya Studios, Los Angeles, October 11th and 12th. Get your tickets at BloombergLive.com/screentime.
Good morning, good morning. This is Bloomberg Surveillance on TV and radio.
Welcome to Bloomberg Markets, China Open.
Good morning, everyone, and welcome to the Pulse.
This is Bloomberg Technology.
And welcome to Balance of Power. This is Bloomberg.
The conversations that matter, the insights you need. This is The Pulse, and I'm Francine Lacqua here in London. Now let's get to some of our top stories that are read on the Bloomberg terminal. And billionaire Bill Ackman reportedly interested in pursuing a deal with Elon Musk's X Corporation as part of a new investment vehicle. Now, Ackman investment fund Pershing Square has regulatory approval for a new investment vehicle that targets private companies seeking to raise $1.5 billion or more. He told the Wall Street Journal that X is absolutely one of the options that he's actually considering. Now, lawyers for the French billionaire Bernard Arnault say allegations of possible money laundering are, quote, as absurd as they are unfounded. Now, the Paris Public Prosecutor's Office confirmed the investigation on Friday. According to Le Monde newspaper, the probe is related to property in the exclusive ski resort of Courchevel. And UBS has reached a settlement with Mozambique over Credit Suisse's role in a shipping finance scandal. The undisclosed settlement closes a decade-old case which initially saw Credit Suisse financing the construction of a new coastal patrol force and tuna fishing fleet for Mozambique. Now, the African nation had alleged the Swiss bank ignored red flags and the corruption of its own bankers' bond deals. And less than a year after losing the crown of Europe's biggest equity market, London looks set to recapture it from Paris as French luxury shares take a tumble. What's the focus of today's big number? It's $30 billion, and it's the gap between the two. We'll have a full roundup of what this means also for the City of London. My interview of the day is probably with Viz Raghavan. He's EMEA Chief Executive Officer for JP Morgan, and it'll be really interesting to get his thoughts on technology, of course on ARM and the fact that they decided to list elsewhere, what this means for the UK and whether there is more of a gap between the UK and also the rest of Europe that's being formed. We'll have plenty more, of course, on the markets. Stocks are rising, bonds are falling, as the US shutdown has also been averted. This is Bloomberg.
The deal was the brainchild of Apollo CEO Mark Rowan. In January, Apollo closed its $11 billion all-stock merger with Athene Holding. It had already owned 35% of the insurer. Here's what Apollo gets out of the deal. Assets under management. Apollo expects them to double to about $1 trillion by 2026. Much of that projected growth will come from the merger, and those assets are especially attractive to Apollo. Insurance companies typically go after much more modest returns than buyout investors. That will give Apollo more options for investing the cash. Athene is a steady provider of fee income. It has grown into one of the nation's biggest holders of fixed annuities, those retirement savings products favored by risk-averse customers. The merger will also allow Apollo to simplify its governance. It gave up its dual-class share structure and adopted a one-share, one-vote plan. The hope is that will eventually lead to Apollo's inclusion in the S&P 500.
Wow!
European stocks and U.S. futures gain after Congress narrowly averts a shutdown, keeping the government running until mid-November. The UK Chancellor tells Bloomberg the government does not have any headroom for tax cuts, setting up a potential standoff with some senior colleagues. Plus, our exclusive interview this hour with the JP Morgan EMEA Chief Executive Viswas Raghavan. Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, this week sees the inaugural JP Morgan's Techstars Leadership Forum in London, which showcases the talent of the future. It comes ahead of the UK's much-anticipated AI Safety Summit early next month. Now, with us now is Vis Raghavan. He's the EMEA Chief Executive Officer at JP Morgan. Vis, as always, thank you so much for giving us a little bit of your busy schedule. Now, you're hosting this tech conference in London today. Given the current deal-making volumes, which are at a decade low, what do you see specifically for tech M&A or tech IPOs?
Morning, Francine. I mean, look, I think what I would call the current environment, as you're seeing some green shoots. You saw the Microsoft Activision deal, seems to be back on track. We advised VMware on the on the Broadcom transaction, the ARM IPO, Instacart IPO. I mean, really, you are beginning to see the re-emergence of a curated set of technology offerings. So, but there are some real drivers at play here too. So if you look at the private equity, venture capital universe, they are sitting on some $2 trillion of firepower, which they are incentivized to deploy. When you look at the secondary pipeline, there's close to about $110 billion of secondary paper. So this is paper where the IPO has already happened a few years ago, that is prime for re-entering the market, and that could be secondary placements. It could go down the M&A route. So there is, even away from a real kind of a valuation, buyer seller kind of slow meeting of minds. There are some fundamental liquidity drivers that it augurs well for tech in general.
Viz, we've always talked about London as the financial center. What are the longer-term implications, though, of a company like ARM deciding to list it in New York?
I mean, I wouldn't infer too much from just one IPO. I mean, every company looks to list in the marketplace that, where its peers are, where it's going to get the most, optimum valuation, where there's going to be secondary market liquidity, research following. There are a whole bunch of factors that kind of drive the choice of a listing venue. So I think it's a bit kind of just to kind of infer from one IPO and draw kind of broader conclusions is probably not entirely correct. But what London has done in terms of the Edinburgh reforms, in terms of increasing its attractiveness, will undoubtedly help. But really, I think there are broader drivers that go into a choice of a listing venue. And there's the secondary marketplace also being kind of a key driver. So London, I think the reforms in place should make it more attractive, and I think the broader desire of the overall market being attractive is also a key kind of component. And I think London is kind of slowly making all the right moves.
And overall, Viz, what are the main trends that you're seeing in ECM this year?
I mean, I would say, I think clearly the return of the IPO, that return is very curated, especially in tech and life sciences and healthcare. The thing around growth with earnings predictability, and so it is very selective. It's a flight to quality, but if those metrics are met, there's a very high probability that transactions actually get done. Away from that, I think convertible bonds are very fashionable with the rising yield environment, volatility levels and realized vols being kind of quite attractive. The temptation on the part of kind of corporates to issue equity at a premium at a better valuation while kind of lowering their cost of financing, will mean converts are here to stay for quite some time. And then finally, it is the whole kind of the secondary sell downs, which will likely keep coming. So you'll see an element of block trades and kind of underwritten transactions. But this is going to be, it's not going to be a deluge. It's going to be very curated. It's going to be very kind of deliberate, and you're going to see this kind of quality driven pipeline kind of slowly materialize.
So where are you seeing most business in your region? Is it definitely the Middle East, and what does it mean for hiring?
I mean, look, I think we are seeing a pickup in activity across every geography. Literally, I would say in the last quarter or maybe 2 quarters, there's been a pickup in RFPs, in bake-offs for IPOs, in sponsor bake-offs for transactions that they want to bring to the market. So I would say I wouldn't single out any particular geography, but I would say pretty much every country you're seeing this selective, curated kind of set of offerings coming to the market. You raised a very good point in the Middle East. I think the Middle East, it really is the moment of the Middle East. There are kind of real kind of forces at play. All the geopolitical tensions we've seen have seen kind of liquidity migrate to the Middle East. You are seeing a real kind of swagger as countries like Saudi Arabia, UAE, Qatar, all are kind of pretty well positioned, both from attracting money managers to hedge funds to also their own domestic economies kind of becoming mainstream. So I think this is a golden era for Middle Eastern companies and in general the Middle East in attracting both attention as well as inward investment. So I think that is really here to stay.
There's quite a lot going on with the U.S. elections. Of course, still the raging war in Ukraine. There's China uncertainty. There's fresh questions about raising rates. Do you look at the world economy and markets and think there's going to be another period of instability?
I think, look, the geopolitical instability is not going to go away anytime soon. We talk about a high rate environment, but it's almost kind of the negative yield or zero yield environment we've seen in the last several years. I think that is more of an anomaly. And if you look back, going back to our tech forum, and if you look at the $1 trillion market cap, mega tech companies, when they started, every one of them actually started and blossomed in a higher yield environment than what we have seen recently. So I do not subscribe to the view that having a healthy yield environment is necessarily bad, because it also leads to prudent capital structures and a degree of responsibility than the era of free money or cheap money that we've just kind of come from. So I do think that the market will adjust, and the cost of capital model will kind of adjust to a higher yield environment, and life goes on, and you'll see kind of companies thrive within a higher kind of yield curve.
What does it mean for JP Morgan? You have quite a lot of course, your rivals going through changes or restructuring, be it Citi, Goldman Sachs. There's also talk about Barclays, and certainly Morgan Stanley will have a new chief executive. Is that a growing opportunity for JP Morgan because of stability?
Yeah, I mean, I don't want to comment on any of our competitors, but when you look at the investment banking fee pool, Francine, I mean, the fee pool is around $80 billion or so every year. I mean, this year is quite anemic. It's going to be somewhere around $65 billion of banking fees. So you're really looking at a pool that is kind of flatlining. And against that backdrop, the way you grow is clearly to grow market share. And I think that's probably the only game in town. And to grow that market share, you really, it is our model lends itself well. The whole kind of scale, completeness, being diversified and being global is really key. And I think all our teams, and when you look about our investments and investments in people, in technology particularly, when you look at the whole drive into kind of AI and the like, you really need to lean in on each of these kind of growth kind of drivers to gain that market share and get that incremental alpha. So sadly you are the fee pool itself is going to flatline, and it's going to kind of really come from asserting your share of the marketplace.
Viz, with Deutsche Bank acquiring Numis, is that a challenge, or does it change actually your prospects for corporate broking business in the city?
I can't comment on that because I don't think the transaction has closed yet. But when you look at the corporate broking model in the UK, and we ourselves. We created this JV with Cazenove nearly, over 15 years ago. And that's been an incredible success. The way we integrated it, the way the Cazenove teams are an integral part of the UK team, that's been an absolute kind of the backbone of our UK investment banking model. And we are a broker to nearly a third of the FTSE 100 and a third of the FTSE mid 250, the largest corporate broker in the UK. So I would say that model has been incredibly successful. And so, it depends on how the Numis acquisition goes. But, it really, takes time to get these acquisitions, integrated and primed for success. The other point I would make is even within broking, the use of technology, the use of, AI and the whole kind of digitalization of the whole kind of broking offering is going to be a massive differentiator, just from everything from, shareholder activity to, peer sectoral, behavior to kind of valuations and comps. I think there is plenty of scope for technology to really take broking to the next level.
And Viz, we're also, of course, in the UK party conference season. Have you spent much time with Labour or with Keir Starmer? What do you make of them? And does it change anything for JP Morgan if they were to be in power?
Look, elections it's about a year away, hopefully. But, yes, I have met Keir. He actually he was at an event at Davos last year, where he met many of the bank CEOs, and we had a round table. I met him recently at a soccer game, and look, I mean, in all our interactions with them, we work closely with both parties, and in our interactions with Labour, they seem exceptionally business friendly, and I think they understand the importance of the City of London to the broader UK economy. So we partner very well with whoever is in government, but elections are some time away, and these things, as you know, are fickle and pretty unpredictable. So may the best party win.
Fiz, thank you so much, as always, for your time. Good luck with the rest of the conference. Fiz was Raghavan there, the EMEA Chief Executive Officer at JP Morgan. Now, later today, we'll also be speaking exclusively to the JP Morgan Chief Executive, Jamie Dimon. Don't miss that conversation, 3 p.m. London time with Emily Chang. Now, another exclusive with the managing partner of Sequoia Capital, Rolf Botha. That's a little bit later today as well. Coming up, the Eni chief executive says the new natural gas found in Indonesia will power up a new production hub in the region. So we'll bring you more of our conversation with Claudio.
Bagi dengar orang Allahu Akbar. Selang 2 minit, 3 minit tu bunyi letupan kedua.
That's me, Max. I have been writing about Wall Street for almost 15 years. And what that means is I write about feuds and rage and rises and falls and comebacks. And every now and then, I also write about a couple of villains. Thank you so much. And now, I am about to do something new and very, very scary. We are making a show. And it's based on Bloomberg Businessweek magazine. So what is this show about? It's a show about money, power, culture, pop business. We're going to ask complicated and profound people about their ideas, their careers, their lives, their risks, their failures, their imagination.
It's so incredibly liberating not to care what other people think.
I was giving my tools to other communities. I wanted to bring those tools home.
Tune in. Please, really actually tune in. I desperately need an audience.
From From the world of politics to the world of business. Every weekday at 5 p.m. Eastern Time, hosts Anne-Marie Hordern and Joe Matthew alongside Kaylee Lines deliver news, insight, and analysis live from Bloomberg's Washington headquarters. Get the latest from and about politics' biggest power players at the end of every trading day. Balance of Power, every weekday at 5 p.m. Eastern Time, only on Bloomberg, your global business authority.
The conversations that matter, the insights you need. This is the Pulse. I'm Francine Lacqua here in London. Now, the Italian energy giant Eni has discovered natural gas in Indonesia in a block close to existing facilities. The chief executive, Claudio Descalzi, says a new resource would allow for a new production hub in the region. While he spoke to Bloomberg's Youssef Gamaeldin at the ADIPEC Energy Summit in Abu Dhabi.
In Indonesia, yes, I think that it's a big hit. We made a big discovery.
How big was the discovery?
The discovery we're announcing, the discovery is the well discovered 5 TCF plus, so in the range of 150 billion cubic meters, plus 400 million of condensate. Is in a good area, is close to our facilities, is close to other structures that we discovered in the past for additional 5 TCS. Overall, we have about a 10 TCF that allow us to open up and build a new hub. We have already John Creek, that is a big one, a new hub in the area. We are in Kutain Basin, East Kalimantan, very close to Bontang, the LNG plant, and very close to the good market, China, India, Vietnam, South Korea. So it's really a huge discovery that we made a few days ago, we can say.
Yeah. I mean, you're clearly making quite a few breakthroughs, so that leads to the other question around whether there's enough upside to potentially justify a revision of the 3.5 billion euro buyback guidance. What's your feeling at the moment?
I think that, the situation from a balance sheet point of view is good. I cannot talk about the third quarter because we have to announce in a few weeks. But as for the first quarter, second quarter, the trend of prices and also the trend of refining margin are very good and justify the buyback. Now we are still at 2.2, clearly, not 3.5. That is the maximum range. Yeah. And that depends on the free cash, depend on the cash flow from operations. As you know, we have a dividend policies, dividend buyback that is linked to the cash flow from operations. So we have each quarter we have to control where we are and then apply our policy.
Well, that was the Chief Executive Officer of Eni on the company's natural gas discovery in Indonesia. Now, the Halliburton Chief Executive Officer, Jeff Miller, says he sees tightness in the oil market continuing amid rising demand. He also spoke to Youssef, again from ADIPEC.
Oil and gas probably is tight, and I think that, that's growing demand, and we see growing demand. Expect that continues. As far as, over tightening, I think the price of oil is going to be, a function of supply and demand. And so I think that, what we're seeing realistically is that it's difficult to produce oil and gas. And I think that we're remembering that or realizing how difficult it is to produce oil and gas, particularly as North America, wrestles with where their production is going to land. And meanwhile, we see lots of activity around the world.
Are we going to see triple-digit oil prices soon?
I always get that question wrong, so I'll just stick with what I'm seeing, which is if we look around the world, there's a lot of support for oil and gas, and particularly oil price. And below 70 never made sense to me, just given what's required to produce oil and gas. Okay. And I think we'll continue to see tightening.
How much of a pushback are you getting from clients? Or another pushback, let's call it, what's the debate like with clients around raising service fees for next year?
Look, I think that service quality and efficiency underpin everything that we do. And so we really always start our conversations around how efficient, how effective are we? I think beyond that, there's a recognition that equipment is tight around the world. And look, we're focused on returns and returning cash to shareholders the same as our customers are. And so I think we've got a very different dynamic in the oil field today than we've probably ever had in terms of discipline, both on capital investment by our clients and by us, and also generating returns over the long term. And I think we're at a place where we can do all of that. And I think our customers understand that returns are what are required in order to invest in research and development and new technology.
Halliburton Chief Executive there, Jeff Miller. Coming up, the Treasury sell-off deepens. We discuss the drivers as well as the equity picture after the U.S. averts a government shutdown.
For your business aspirations across ASEAN and Greater China, we have what it takes. With teams in the region working as one group, we have the expertise to unlock every door. For now and beyond. OCBC.
Would you say race relations in the United States are much better than when you were growing up in Mississippi, or do you think we've made less progress than you think we should have made?
Both. I think that much better than when I was growing up. There's so many people who occupy areas and I never thought I would see them in. But I would have hoped it would be better. It's been a lot of progress, and somehow we're in an era now where, in spite of the progress, race relations in certain areas has become very scary. You know, some of the things that one reads about now remind me of growing up in Mississippi.
From the beating heart of global finance, economics and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. How has that shaped your strategy for the bank? Is this a new normal? Is this like a catalyst? Do you think we're in a new phase for dividend policy overall? That's a great question. I'm Francine Lacqua, and this is The Pulse, every weekday at 9 a.m. only on Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield every Friday at 1 p.m. Eastern, right here on Bloomberg, your global business authority.
Welcome back. Now let's take a look at the markets with Bloomberg's Valerie Teitel. So, Valerie, a lot going on when you look at treasuries, but also equities. Will the rally in equities last, given how treasury yields are actually behaving? The million-dollar question.
Yeah, good question, Francine. I'm one surprised to see how resilient the equity market is in the face of these higher treasury yields this morning. S&P futures and NASDAQ futures both solidly in the green on this first day of the fourth quarter. This is all happening amid the backdrop of rising treasury yields. Let me show you how the curve is behaving. We are nearly 5 basis points higher across the entire Treasury curve. Remember, Francine, last week's narrative was very much that these higher Treasury yields were really denting risk sentiment, really denting this appetite when it came to futures. It's posing a few questions out there to the market. We're now thinking about the supply and demand dynamic when it comes to this Treasury market, that maybe the first big loser of this higher for longer mantra is actually the U.S. government. 30% of Treasuries need to be refinanced in the next 16 months. Will these yield levels tempt foreign buyers back in, or do they need something juicier? And on that note, we do hear from some Fed speakers later today. We hear from the man himself. Jerome Powell will be speaking at 4 p.m. UK time alongside Patrick Harker, the Federal Reserve Bank president of Philadelphia. There will be Q&A from the audience at this meeting, Francine. Will he be asked about the recent rise in Treasury yields? And will he mention any concerns he has with the fact that these yields in the long end have risen so rapidly in the month of September?
So, Val, what are the other ramifications of higher Treasury yields?
Oh, the obvious one is Japan, especially when it comes to dollar-yen. We saw it happen overnight that the rise higher in Treasury yields forced JGB yields higher, and the Bank of Japan to step in again with more bond purchases, leading to a weaker yen on the day. We actually hit the lowest level for the yen this year, touching 149.80 nearly in the overnight session. Many traders have the big figure 150 on their mind for what could potentially spur the Ministry of Finance to intervene in this FX market.
Val, thank you so much. Bloomberg's Valerie Teitel there with the very latest, of course, on not only Japanese yen, but treasuries. Up next, Bloomberg Brief with Danny Berger in London, Manus Cranny in New York, and this is Bloomberg.
From the world of politics.
We're not going to be relying upon countries whose values we don't share.
To the world of business.
It's all about corporate power at the end.
Balance of Power. Live from Bloomberg's Washington headquarters.
We couldn't be more excited what's in store for you.
How long will it take? How many years?
Why don't we take this one day at a time?
Good luck. Everybody has a perspective.
Every weekday at 5 p.m. Eastern Time. Join host Anne-Marie Hordern.
It's the one area, really, of bipartisanship.
I think we're getting more of it.
That's optimistic.
And Joe Matthew.
The debt ceiling is looming. How close are we going to get to the line before you start to worry?
Alongside Kaylee Lange.
The door was open for regulators to do more, and that puts the Fed between a rock and a hard place.
As they deliver news.
This is such an important economic issue.
He's no longer trying to run away from
that. Really blew some minds.
Insight.
We can both invest in law enforcement and also make sure that communities feel safe in their own skin.
And analysis.
I think your audience will get this more than most.
This is not the Republican Party that you know.
It allows him to do what he did so successfully in 2020, which is run against crazy.
From and about politics' biggest power players.
This was the zombie case, and it's now more than well alive.
That's for sure, with two more potentially to come.
I'm willing to have this battle.
It is vitally important.
This is the intersection of Washington and Wall Street.
Bringing people directly to the decision makers that impact your investments and your life.
Balance of Power, every weekday at 5 p.m. Eastern, only on Bloomberg, your global business authority. From our studios in New York and San Francisco, our expert hosts of the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology. the only daily business show dedicated to tech, right in the middle of the trading action. 12 p.m. on the East Coast, 9 a.m. in the West. Only on Bloomberg Television, your global business authority. This month, Bloomberg brings you the latest from China's 14th Annual National People's Congress, including China's COVID recovery, economic outlook, and geopolitical tensions. Continuing coverage this week on Bloomberg.
Good morning from our world headquarters in New York. I'm Manus Cranny.
And from our studios in London, I'm Danny Berger. Welcome to Bloomberg Brief. Let's set your agenda.
Crisis averted. Kevin McCarthy secures a last-minute bipartisan deal to keep the government open, but triggers a mutiny to depose him as House Speaker. The Bank of Japan intervenes again to curb decade-high yields. Yen hits a new one-year low. And Jerome Powell and Christine Lagarde both speak this week as investors brace for a deluge of data with jobs jolts in focus. A very good morning to you. So last week, have you recovered from your PTSD in the bond market? There was quite literally a hurricane of revaluation on inflation and higher for longer. This morning, we start with the shutdown that has been averted. And so we're back to basics. What will Powell say to the market today? Yields march higher and the shorts are mounting in this market. You're the biggest quarterly loss since 2009. We're now down to a 1 in 3 chance of a hike in November. What will Powell say to reset the tone? In terms of dollar yen, this is where you really want to focus. The Bank of Japan intervenes to stymie that rise in yields. You can see it at the bottom of your screen. The last time we saw this kind of intervention was last week. We're at a decade high in JGBs. This is the market testing the JGBs, testing dollar yen. It really, the more and more that they go, the Ministry of Finance, to try and take out 150. Does it expedite a faster reversal from yield curve control is what we can ask Kit Jukes a little bit later on today. The Finance Minister reiterates he is watching the currency closely. And I just thought for a little bit of a free song, a little bit of a change, Monday morning, why not have a little bit of Bitcoin? You've got 6 weeks of inflows into this market. The speculation is that the SEC will approve BlackRock's Bitcoin ETF. By the way, last quarter you lost 11% on Bitcoin, and there was a huge withdrawal from that market. $500 million came out in the last 9 weeks. Bit of Bitcoin, Danny, good morning.
Good morning, Manus. I think today's going to be a good day because I can't remember the last time you did Bitcoin. That's a treat. I like that. Getting a little bit risky today. Why not? Look, I've got some of the rest of the risk markets here. I've got equities. I think equities are going to be really interesting this October. After a very bad September, after the worst quarter in a year, can they rebound or will that bearish momentum continue? At least for Europe, it is. European equities mostly unchanged, but ever so slightly into the red. But we are on the upside for S&P and NASDAQ futures, where we may be just all too bared up about a government shutdown. Does the relief of that, the kicking the can down the road, does it allow us to rally, and especially in the NASDAQ? But you got to imagine there's a lot of threats, especially as yields pump higher. And Manus, to this point, I want to talk about today's big take, and Big Take Go on the terminal. It's excellent. It's from the Bloomberg economics team, who say that every other recession over the past 4 decades, everyone was calling for a soft landing heading into it. So their base case is a recession, writing a soft landing remains possible. Is it the most likely outcome, though, with the U.S. confronting the combined impact of Fed, strikes, student loan repayments, oil prices, and a slowdown? Manus, they think not.
Well, I mean, no landing, hard landing, quasi-hard landing. Either way, if you then take that statement, so no soft landing, take your Larry Fink statement that you're now looking at structurally embedded inflation that he hasn't seen for decades. I put it back to you and I say the environment then goes back to the narrative of stagflation. If it's going to be harder than they all think, inflation's going to be higher, and rates are going to be higher for longer. Does that really give you, as Lance Bernstein said last week, 2.5% on bond yields or not? Stagflation, again, will be a key part of our discussion. But Danny, let's reset. The US narrowly averted, as you said, that disruptive and costly shutdown as Congress passed a compromise piece of legislation to keep the government running at least until November the 17th. Hours later, President Joe Biden urged House Speaker Kevin McCarthy to follow up quickly with support for Ukraine.
I fully expect the Speaker to keep his commitment to secure the passage and support needed to help Ukraine as they defend themselves against aggression and brutality.
Joining us now is Kathy Ackley from Bloomberg Government. Kate, good to see you this morning. So we're going to be having these same last-minute theatrics in November. This is just extend and pretend for 40-odd days, isn't it?
Right. This was just, like you said, kicking the can down the road till mid-November, where we're going to have this fight again. But in reality, the fight begins today. You know, Congress had sort of a whirlwind weekend. It could have been a much longer weekend, but they averted the shutdown on Saturday night with the Senate passage of the continuing resolution to keep the government funded until November 17th. So now there's going to be a challenge, it looks like, to House Speaker Kevin McCarthy's position. He's got, conservatives in his conference who want to oust him, led by Florida Republican Congressman Matt Gaetz. So that is something, that's how we're going to kind of start the week off here in Washington. And, you know, there are personalities, involved here. It's a personality fight, but it's also a fight over funding for Ukraine and just a whole number of other things.
Kathy, to that point, we have some sound from House Speaker Kevin McCarthy. He spoke to CBS Face the Nation over the weekend. Let's take a listen to that.
He's more interested in securing TV interviews than doing something. He wanted to push us into a shutdown, even threatening his own district with all the military people there who would not be paid, only because he wants to take this motion. So be it. Bring it on. Let's get over with it, and let's start governing.
So he's speaking about Gaetz there. Kate, if McCarthy goes, what does a likely replacement look like?
Well, first of all, either way, whatever is going to happen is going to have to look like what it looked like the House bill on Saturday. And it's going to have to be bipartisan. It's going to require Democrats. So if Congressman Gaetz is going to be successful in ousting McCarthy, he's going to need Democrats to help him do that. If McCarthy is going to stay on, he's going to need Democrats to help, vote for him or vote present or, somehow make it so that he's able to stay. So that's the first step. Something is going to be sort of in a bipartisan fashion. Who might replace him? That's not something that a lot of people are talking about because, there've been discussions that somebody in his current leadership, Whip Tom Emmer, who's a congressman from Minnesota, could be. Emmer has said, I don't want the job. So that's another problem is you got to find somebody who wants the job. Is there going to be some sort of consensus pick that Democrats and Republicans coalesce around? That's a tall order, right. And we'll see what happens.
It certainly is, Kate. Thank you very much for joining us for Waking Up Early. Kate Ackley of Bloomberg Government, thank you so much. And tune in later to our interview with Congressman Matt Gaetz on balance of power. That will be 5 p.m. Eastern. So what does all of this mean for markets? Joining us now is Kit Chooks, head of FX strategy at SocGen. Kit, I know you're writing before that should we get this shutdown, it would start the downtrend of the dollar. So is this dollar downtrend avoided then?
It makes it harder for it to happen right now. I think, look, you've got lots of things happening at the same time. We've had 2 really bad months for risk sentiment that's helped the dollar. We've had weak equity markets have helped. We've had a sort of a spate of continuously weak data in both Asia and Europe that have helped the dollar. And you've seen as a result of that, the positioning has sort of taken the dollar higher as people have got out of euro longs and then into, I think, a big, broad consensus long dollar position. So at the end of last week, part of me thinking, well, okay, what does that give for this week? But it sort of just throws us back to the biggest driver of all, which is this huge rise in Treasury yields as the vigilantes take over. Because the one thing that's not going to stop is Treasury issuance. We're going to have to find the clearing price for all these bonds and notes. And if the next place we go is 460 on a 475 on a 10-year note, then the dollar's going up. And I think the vigilante's in charge. And I'm looking at it this morning thinking, okay, we popped up to a new high because the shutdown was postponed. we're still where we were. Really, something has to happen to make more people want to buy more bonds. And if the Chinese can't buy any because they're too busy doing something else, and the Japanese are selling them because they're doing something to help their currency, that'll all just make it harder.
Kit, good morning to you. The voice of doom there on a Monday morning. 475 on the 10-year notes. The Japanese aren't buying, and the Chinese are reluctant owners of treasuries, in actual fact, divestors. Okay, take me to 475. What does that do to risk? Because this market has not quite grasped. Last week, there was a hurricane went through the bond market. But if we're going to 475, Kit, what happens to overall risk at that kind of level? How soon could we get there?
I think it depends how fast it goes. I mean, we've had these yields and higher yields lots of times in the past. I don't think it necessarily does. You've got to remember, I mean, the overall risk sentiment is possibly the most resilient bit potentially after two such bad months. I've never been able to forecast equities, never understood them, but I wouldn't necessarily think they go on getting sold off. But let's put it this way: I think there's a better chance that risk sentiment stabilizes enough for emerging market currencies to get a little bit of a bid than we get the kind of good enough risk sentiment to make you think euro-dollar's going back up.
Kit, if you were excellent at forecasting equities, I think you'd need a different job, right? So I think that's okay. I think it's fine we stick to FX.
It's the only market I haven't done. Let's put it that way. There's a reason I don't do it.
Okay, fair enough. Okay, so you talked about the spending of the government. That's not going away anytime soon. What about the spending of the consumer? Could that be the thing that cracks and brings yields lower?
Well, yeah, eventually it will, right? So this is, so there is a degree to which what's been driving the U.S. economy is there was so much fiscal largesse, put so much money in so many bank accounts, and it still hasn't run out. And there's a labor market that's so tight that keeps that going because it keeps wages up and keeps the whole system going. There's a sense that, a landing is inevitable because this all does come to an end. And the politics just risks a harder landing than otherwise. But the landing takes time. I know we've got a forecast of a recession in the middle of next year. Just all along it seemed like people either said there's never going to be one or it's got to be tomorrow. And so I think we can crawl on for a bit. But the question is whether you turn the data around fast enough to really sort of move it. Because if you get a slightly softer numbers, you're not changing the story very much.
And part of that narrative for you is that you're going to see more rate cuts coming through next year, and that really gives full steam to the dollar's demise. I want to put this to you from Martin Malone, who was with Danny and I last week, and he talks about the Volcker era. 1982 was successful for Volcker. He quashed inflation, but they needed an inflation, which was worse than the 1930s depression. Note, inflation reaccelerated to 5% in 1984 and 6% in 1990. That is the single biggest risk here, Kit, isn't it? That there is some kind of an reacceleration into 2024. Do you see that as a real risk and an underpriced risk?
Yes, it's a risk in the sense that, that it could happen. That I've been surprised that so many bits of the labor market have bargaining pressure. That there's so many things that are that seeing inflation try to come back. I think on balance, what you'd think is you'll get you'll get some mini cycles higher of inflation, and then we'll get it back under control. I still think the global economy's changed shape enough that what we mostly consumer services and the additional cost of producing them is low enough that we're not going to go back, certainly so, to an echo of the 70s, which is what those sort of 80s recession cycles were. But most of all, all our experience of inflation is based on one period in history.
Yeah.
That's it. So we write books and say pretend we get PhDs and we have one relevant period to go with.
You are just putting people out of business left and right. Hold those thoughts. We're going to get back to you. We have a lot more to cover. That's SocGen's Kit Chooks, who's going to stick around with us. All right, let's get to some of the stories that we are tracking on the terminal this morning. California Governor Gavin Newsom will appoint LaFonza Butler to fill the remainder of Dianne Feinstein's term, making her the only black woman in the U.S. Senate and just the third in its history.
And of course, we've got China's manufacturing its activity returned to expansion in September. For the first time in 6 months, a sign that stimulus may be taking root. Of course, China's closed for Golden Week this week. Danny.
And then at the same time, the Bank of Japan announced an extra bond buying plan for this week following an unscheduled operation it conducted on Friday. Now, coming up, we're going to discuss just that, the yen, the BOJ with Kit Jukes of SocGen. He's sticking around with us. Also, coming up later this hour, we're live from the ADIPEC Energy Conference in Abu Dhabi with S&P Global Vice Chair Dan Yergin. And then later today, Bloomberg's Emily Chang sits down with JP Morgan CEO Jamie Dimon for an exclusive interview. That's 10 a.m. New York time, 3 p.m. in London. This is Bloomberg.
Obviously, we're trying a new industry and how shoes are even made. But as we went down that path and started to just learn and research more, we learned that shoes have not been made for women. What that means is a shoe is made off of a last, which is a mold of the foot, and it's the mold of a man's foot used to make women's sneakers. And I think it took time for us to really grasp that because, you know,